Today we are going to look at the stock market. During this unit we're going to explore a lot of different areas of the stock market, but the first thing we need to do is we need to have a good firm understanding of what the stock market is, why it's important, and how it can help you as an individual and as a company. So first let's think of what the stock market is. Why do we start a business in the first place? Think of your own business that you're starting for CEO Challenge. Now, of course, you might be doing it because it's a class and you have to, but if you were really starting this business, the key aim is likely to make a profit. Profit is when you make money in business. Mathematically, profit equals the revenue, the amount of money that comes in, minus the cost, the amount of money that goes out. So let's look at an example. If you buy an iPod for $250 and sell it for $300, you made a profit of. Take a moment to think about that. Hopefully you came up with $50. If you purchase an iPod for $250, that's your cost. If you sell it for $300, that's your revenue, that's the amount of money coming in. So the total money you have left over is $50. Unfortunately, there's also a real possibility that as a business you could lose money, and that's called a loss. This can happen to new businesses as well as businesses that have been established. So let's think of how we raise money to start a new business, or if you're a company and you're already established, how can you get money? One way is to borrow money from a bank. This is a loan. I want you to think of the business letter to your bank. You requested $50,000 from a bank, and of course, because your business idea is so great, you got the $50,000. But unfortunately that money must be paid back, usually with interest. There's another way that you can also raise money for your company, and that's through the stock market. When you sell ownership in your company, you are selling a stock. This means you have other people give you money and they have a share in the profits and the losses of your company. That's why a single unit is referred to as a share. So you sell a portion of your company or you buy a portion of somebody else's company. So when they make money, you make money. When they lose money, you lose money. Dividends. When a company makes profit, they typically pay the owners of a stock a dividend. This means when the company makes money, whatever their profit is, you're going to get a portion of it. If you own 1/10 of the company, then you'll make 10% of what the company makes. If you own less than that, then you'll make less. So what's the stock market? When you own companies or portions of companies, you can sell your ownership to other people, or you can buy other people's ownership. This is called the stock market. One big stock market that is often used is the New York Stock Exchange. This is the one used in America. Stock prices. When a company is doing well, more people want to buy the stock and its price in the market rises. So if your company is doing really, really well, people are going to want to buy it. It's the same with other companies. If McDonald's is doing really, really well and they're making money, people are going to want to buy McDonald's. But if the company's not doing well, people are going to want to sell their ownership. Nobody wants to own a company that's not doing great. So let's look at a quick recap. Business people raise money by selling stock. That's their ownership of the company. They give it to somebody else. People who buy these shares can sell them on the market at a higher price and make money. They could also sell it at a loss. Another way of thinking about it is a share is like a piece of the pie. When you buy a unit of a company, you purchase a share. So let's think about it as you got a piece of the pie. When that company is doing really well, your piece of the pie will get bigger, which means the amount of money you make and the amount you can sell that company for will go up. At the same time, if the company is not doing well, your piece of the pie will get smaller.